Hello and welcome to SwitzerTV Property. I'm Peter Switzer, and on tonight's show we talk to one of Australia's best developers, Tim Gurner, on how buyers are returning to real estate and what they think about apartments with building and cladding issues. Next, the founder of Century 21, Charles Tarby, tells us what's happening in real estate at the coalface and who's right, CoreLogic or REA, when it comes to house price rises. And finally, the MD of Qualitas, Tim Johansson, weighs up his thoughts about what the property market is like right now as a lender and funder of developers. That's the show for tonight. Tim Gurner, thanks for joining us on the SwitzerTV Property Show.
How are you, Peter?
All the better for seeing you, mate. Now, I've got to say, I always thought about you over 2017, 2018, when we know that both Sydney and Melbourne house prices were struggling. How did you find that period?
Yeah, look, it's interesting. Looking back now, obviously at the time we thought 2017 was tough. We obviously look back now and think it was absolute boom time. You know, it was sales were easy. There were a lot of people around, a lot of interest. There was a lot of, a lot happening back in 2017. 2018 we thought was a lot harder again. And we look back at that now and think that was really easy compared to the last 9 months.
All right. So what are you saying the last 9 months has been hard?
Oh yeah, we really felt it when Malcolm Turnbull got rolled. That was probably the one date for us that really changed everything. I think the day that Malcolm Turnbull got turned over, everyone thought Shorten was coming in. There was going to be a lot of tax change, a lot of negativity came into the market. We then had the Banking Royal Commission. We then had everyone waiting for the election, and it was a period that was by far the hardest period I've seen in my career, without doubt. Yeah. And interestingly, we all sort of thought after the election it was going to come back pretty strong, and as you know, it didn't. So it's really interesting. You can imagine what would have happened if there was that conversion over to Shorten.
So what are you seeing right now? How many properties would you have available for sale, and what's the market reaction? Because you've implied that it's been a bit slow since the election.
Yeah, look, it has been very, very hard, but we've actually had a great 12 months. We've sold 750 million since October last year. But I'll say it's been incredibly difficult, and they've been very special projects. So we've obviously got St. Moritz, which was 450 million, and then we've just sold out of Victorian Vine as well, where we've got 6 apartments left there, which is a $300 million job. So those two jobs, very iconic, very special projects, and a little bit out of the normal market. So really what we're seeing in the market is anything that isn't absolute A grade is very, very slow and very difficult, or even not possible, really.
You go on.
So St. Moritz, we've got 4 apartments left there. We've got 6 apartments left at Victorian Vine, which we just started demolition on yesterday. So we've had a good period, but it's been incredibly hard work and having to do 10 to 15 times the amount of work to get the same result as what we had to 2 years ago.
Yeah. Before the election, were you suffering sleepless nights, or you were able to survive the pressure of being a developer?
I was trying to work out how you can drive for Uber. I was trying to work out how you could be a registered driver, to be honest. No, look, the thought of Shorten coming in was a very frightening thought for all of us in real estate, as you'd know. And I think we now see the fact that he didn't get in, and even then the market has been very, very tough. The effect he would have been absolutely catastrophic, and I think we would have seen some very significant price falls. Okay,
part of your business always is to have lenders on side, and historically the banks have treated you well. What's the treatment like? So just talk us through, was there a period over 17 and 18 where banks became a little bit more gun shy, maybe pre-election, and has that gun shyness, if it existed, has it changed?
I think there's 2 forms. Obviously, is the retail lending, which is to our purchases at the back end. That has been incredibly difficult. Obviously, I think that's where the market has hurt the most. People are finding it very hard to prove up incomes, prove up cost base, and actually be able to get debt levels. And if they can get debt levels, they were getting sort of 30 to 40% less than what they would have 2 years ago, as you well aware know. That's had a massive effect on confidence. I mean, people that could have very easily borrowed in a normal environment are having trouble borrowing, having trouble settling. That has into confidence. I think we're starting to see that come back now. Obviously, there's a lot of pressure from the Treasurer, there's a lot of pressure from the CEOs of the banks to say, we've taken it too far, we need to ease back. and we need to start to get some liquidity back in the market, because if they don't, we're going to see a fundamental undersupply in the next 18 to 24 months, and something that will reverse everything that the Banking Royal Commission was about. And that's one element of it. For construction lending for us, we've been, as you mentioned, very, very fortunate. We've got a great relationship with ANZ. They supported me with $300 million at St. Moritz, and then another $150 million at Victorian Vine. And we're getting structures and deals very similar to what we were 2 years ago. There hasn't been a huge change for us. However, I know we're in a very small minority that is getting lending from the major banks. Majority of people are using second-tier lenders and super funds. Super funds have taken a big piece of the market now as well. And groups like MaxCap, they've taken a very large chunk of the market.
Tim, do you think because you do specialise in high-end and not so cheap apartments, that has actually been a help to you, because the people who are more likely to get money, I would have thought, were people who are pretty well heeled?
Yeah, absolutely. I think St. Moritz is a prime example. I mean, the buyers there, I didn't get one question about finance or one question about the market or the economy or jobs, because most of those people there are downsizing from a large home, they're selling a larger asset and buying a cheaper apartment. And so if you're selling something for 10 million, you're buying something for 6, you are deleveraging, or you're actually putting money aside as well. So definitely in that market, we've been very, very fortunate. But the investment market is also really important. You know, like everyone's saying, oh, the Chinese investors came in and killed our market. Well, I think the Chinese investors helped regulate prices. I mean, as we all know, the fundamentals of supply and demand dictate our market, and the Chinese developers and buyers came in and brought a huge amount of supply to our market. And we're still seeing rental vacancies under 1.5% and rents rising. So imagine if they weren't there. I mean, I think we would have seen significant price growth if the Chinese weren't there.
Yeah. I guess one big issue that's bobbed up over the last year or so has been concerns about the structural integrity of apartment blocks, and then you've also got the cladding issue. Now, I don't think you'd ever put your hand up and say, I've got integrity issues with my apartment blocks or anything like that, because I know the way you operate. But because that image is out there in the market, is it making it harder for developers to, talk confidently about their products, because some buyers would be just nervous?
Yeah. Unfortunately, the cladding and the building issues have had a massive impact on Off the Plan. And I guess if you look at Off the Plan as a brand, the brand has had significant issues in the last 12 months. Unfortunately, though, it is a very small minority. And the big issue with structural integrity in particular is it's all focused to Sydney, where Sydney and New South Wales, as you know, is the only state that doesn't have dual certification. So in Sydney, you can have a young person in a structural engineer's office draw a design, issue it to a builder, and no one checks it. Whereas in Victoria and Queensland, we have dual certification. So someone independent reviews every structural drawing and has to check it and make sure it's right. And that's the big difference. And that's why the focus has mainly been in New South Wales. And we haven't had those issues so far in Victoria or Queensland. The cladding issue, look, for me, I'm very fortunate. I don't like cladding on buildings personally. I like using raw materials and concrete and steel. This product is a product that was approved by everyone. There's a lot of criticism out there about a few builders at the moment, which is extremely unfair, because this is a product that was approved by the VBA, approved by every single authority in Victoria, and they're trying to do the blame game, blaming builders. But this is a product that was approved to be able to use for architects, builders and developers. Yes, unfortunately, it's a terrible product that should never have been out there, and it needs to be stripped off the buildings, but we can't be blaming builders who have followed the rules and done everything right.
Okay. One last one, mate. A couple of last ones. I always have more than one last one. What can governments do to make it easier for developers to increase the supply without clearly undermining the integrity of the products that are going to be built?
Yeah, I think, look, planning approvals, if we start at the start, planning approvals has to be a better streamlined process. You look at some of the local councils down here, it's run by 6 or 8 councillors who don't know much about property, if anything about property. It really needs to be dictated by industry leaders who understand what's happening, and government officials that are looking to the future growth of Victoria, New South Wales and Queensland. People that are saying we need to house another 1 million people in the next 10 years or whatever the number is, and actually looking at it from a strategic perspective, it should never be dictated by people who can control votes. The biggest issue for me is if you're a councillor and I'm one big bad developer and there's 500 locals that are objecting, of course I'm going to go with the locals because I want their votes. It needs to be something that sits outside of politics and is looking at the future strategy of each individual state. The other thing obviously is funding at the moment. I mean, retail lending is a major issue. We've got a lot of people that should be able to secure lending very easily in a very normal process, but it is extremely difficult. There's 85 to 86 checkpoints through a simple investment loan application nowadays. That has to change. You know, I know obviously we need to have transparency and realness through the finance process, but it also has to allow people to be able to borrow and for the economy to keep going, because all of our states, particularly Victoria, where 48% of our state revenue is from the property industry, we have to keep the industries moving, or we're going to see a massive undersupply, which now CBA's come out, RBA's come out and said we're looking like there's going to be undersupply in 18 months. We've been saying that for 3 years, and I thought it was pretty obvious because we're seeing rentals every year. We renew rentals, rents are going up, vacancy rates are still dropping, and building approvals have absolutely fallen off a cliff. So there's, you know, in 18 months' time, I think we're going to see a real price surge.
Yeah. Okay. One last one. The road ahead for Gurner. What's happening in the year ahead?
Look, we've got a really exciting year of delivery, to be honest. I mean, we've got St Moritz under construction now, obviously, which is a very important project for us. Victoria and Vine under construction. We've got Albert Place completing in February, Hawkesburn completing in February. We've got a couple of big projects we'll launch next year, but very much just watching the market pretty carefully. Like, we think that there will be a pretty big jump in prices and rentals at the end of next year, and that's when we'll have a really good look at it. And looking at a lot of opportunities. You know, for us, we don't need a huge amount more right now, but always looking at new opportunities.
And one final one. Have young Australians overcome their avocado problem?
You had to ask me that one, didn't you? I actually don't know. I think it's still getting a little bit of press, so maybe not yet. It is a great product, though.
Great stuff. Tim Gurner, thanks for joining us.
Thanks a lot, Peter.
In our search to find out what's actually going on in the real estate market, there's no person better to talk to than Charles Tarby, the founder of SwitzerTV. Mate, good to see you.
Thank you.
Now, there's a bit of controversy going on at the moment, you know, with all the statisticians out there. And, you know, CoreLogic, that's what the group that's always reported in newspapers, but REA's chief economist thinks that they are overstating the comeback in house prices in capital cities. What are you seeing out there, Charles?
Well, they've got real figures, so they can't overstate. Whatever their numbers are the numbers. So the feeling that we're getting, which is very, very different to what it was like just only 3 or 4 months ago. Yeah. Lots more buyers, fewer listings, although the listing numbers are climbing. A lot more people interested in buying now feel that they've missed out because they were told to wait because the prices are going to drop, and they now feel like they've missed out. So if you go out and talk to the agents and watch what's going on, there's so much more activity than we've seen in a very, very long time. And of course the auction clearance rates are indicating that activity is turning into actual business. The only thing slowing it down, of course, is the way in which banks are lending. Yeah.
Now, you're an unusual real estate agent, Charles. You're unusual in every aspect of your life.
Thanks,
but you warned about the house price boom around 2016. You thought it was excessive. You thought it was going to cause a problem, and it did. There were a whole lot of mitigating factors apart from the fact that the market was overbidding. But do you think there will be like a rebound back into the problematical era of 2016?
No, I don't think it'll be that problematic. I think what's happened is we've gone back to the price levels of 2016, which is where they needed to go back to. People were predicting prices would be a lot lower than that year, but we could see 2016, 2017 as being where they needed to go back to. They did that, and now they're levelling out and they're starting to move in a gradual manner. And I think that controlled gradual manner is good because listing numbers started to climb in the last few weeks. They were short. So now more and more vendors are going, oh, you know what, this might be a good time to sell. Their only issue is trying to find something to buy.
Yeah, so I want to ask you about that. Have you seen a listing problem like this before, and how long does it take to clear? And I guess the other curveball is, with the population growth in places like
That's the other area. That's the other area people aren't factoring in.
Yeah.
Now we were talking about this back in 2010, that by 2020 there'd be, if they didn't build a few 100,000 homes each year, we would have a massive shortage.
Yeah.
Now we're coming back into that arena again, apart from apartment complexes coming up and having their issues.
And we'll talk about that too.
The real issue is that listings weren't the key years and years ago. In fact, there was that much stock in Australia that nobody wanted to buy, and this is why multiple listing groups came about, because they tried to find ways to share their listings. Now agents don't want to share their listings at all. So it's a very, very different world that we live in now. The Australian economy or the attraction to Australian real estate is massive around the world. Nothing like it was when I was in the industry 10 years ago, 20, 30, 40 years ago. Now it's massive. And I think that that's a completely different world that we live in, and you can't go back historically and say, oh well, this is what it was like. No, no, no. We've got a lot of people want to live here. We have a shortage of properties being built. Unless they start really building momentum there, we will have an issue with property, not buyers.
Some alarmists worry that there's an oversupply of apartments, there's a whole lot in the pipeline. But I think, well, at the very worst, it might drive prices down, and all of a sudden people will be able to buy, and there'll be stuff to buy. Are you worried about the apartment supply issue?
It's been an issue for a couple of years, and we flagged that as a major problem, because we didn't think the valuations would stack up with the banks, and that's what's happened. Banks are getting nervous, increasing their loan value ratio, all sorts of different things. So the potential for people to come in and buy apartments is already there now. It's a matter of whether they want to. This is
this next question.
And there is some issues with those complexes, because when you buy off the plan, you buy the beautiful, wonderful picture.
Nice picture.
And when the complex is 100% sold, there's not as much pressure on the developers and all moving forward to really do anything spectacular to keep the interest of people, because they've already got them. And so I think there've been a few shortcuts after there've been a number of contracts in, and those shortcuts are now showing up in some of those buildings.
Okay, how worried are buyers at the coalface about the structural integrity of the buildings that they're looking at, and secondly, the cladding issue?
Look, fortunately in Australia, even though they talk about private certifiers as being the main cause of this, I mean, at the end of the day, the councils have got to agree on the development, and they've got to give final approval on the development. I think that there might be a few issues out there, but I think in the mainstream, when you look at the number of apartments that have been built out there, the thousands and thousands of apartments across the country, there have been some issues with only a few modest ones, and I think that they're getting to the bottom of those very quickly.
Yeah, so you're not seeing, say, young people who are natural candidates for apartments because of the price point. They're not fearing that they might be buying a pig in the poke.
Oh, they probably are, but then they've got to do their work. They've got to do their homework. I mean, even if it's an apartment complex, and even if I'm about to settle on it, I'm going to get a building inspector to come in and have a look. I'm going to pay for that, and because I want to know for sure that I'm getting what I paid for.
But given the fact that the developers might be feeling a bit toey about the customers feeling toey, is there some better buying now as a consequence? There
is, and some of those buyers are not in the greatest of locations. The influx of developers into the industry over the last few years, and then the multiple numbers of apartments coming up didn't always come up in great locations. This is the thing. So there's a lot of very average locations, I think, around Sydney, Brisbane, Melbourne, that people, if they're going to buy it, they'll do okay, but they could sit there for a while before they get any real price gain, because the rest of the market's got to take off before those apartments are going to take off.
Okay. What is the question I should have asked you that I haven't asked you?
What's that?
Well, given your brilliance and
where do I come from? Where do I grow? I grew up in Crookwell, Peter. Thanks for reminding me.
I guess from my point
of view, wonderful
town. Well, I'm talking your history.
All right.
Your history is history, but we want the future. Do you think the feeling is that this market can gradually improve, and that listings will eventually arrive, and therefore eliminate the fear that a big house price boom takes off again?
Yeah, I think so. I think that we're going to start to see a steadier flow of stock coming into the marketplace, which will take the pressure off the buyers, because there's too many buyers turning up at open. So I know it sounds strange to say that, but and there an auction I saw on the weekend, parts of, they had 57 bidders bidders.
Gee.
You know, and this is sort of a bit
2 years
concern.
ago they had
That's
zero.
right. I was lucky to get one bidder when I was doing my auctions, and that was probably a person hiding behind a tree, and I couldn't even see them properly. And you struggle to get a bid from people. Nowadays, that's not the battle. The battle is making sure that we get a good flow of stock. I'm starting to see a climb in the stock levels.
Yeah.
Each week we're watching that the stock levels are increasing, and I think that when we start to get a steady flow of stock and the developers start or the government starts looking at how to assist builders and developers build more property, I think we'll be fine.
One last question, the latest first home buyer scheme. What do you think about it?
Look, all of those, they keep coming in. These schemes they seem to come in after the event when they're not as needed.
That's right.
And because with the bureaucracy, it just seems to take so long to get things through. Any assistance for first home buyers is great. I never got that chance when I was a first home buyer. Back in my day, they were terminating building society loans, and they were at 12.5% and 9.75%.
I recall them.
And if you qualified for those, they were like hen's teeth. But it's great to see any opportunity to help a home buyer get in and establish themselves in their home.
Charles, thanks for joining us.
Thanks, Peter.
Charles Sarby, founder of SwitzerTV. Tim, thanks for joining us.
Thanks, Peter.
So for people who don't know Qualitas, explain what you do, because I want to talk about property, obviously, but from the point of view of where you specialise.
Okay, so Qualitas we're a real estate investment manager. So what that means is we manage capital on behalf of institutional wholesale clients, both offshore and domestically. And that capital that's invested with us is invested through a number of funds and various strategies, and then we deploy that into various transactions in the real estate industry.
Okay. A lot of people wouldn't know what you're talking about, institutional money and stuff like that. Do you take normal people's money and put it into a big fund and then provide those funds to developers and other people like that?
Yeah, so we have a mix. So when I talk institutions, I talk about sovereign funds, insurance companies, pension funds, superannuation companies.
Yeah.
So those groups are looking for managers to look after their capital as it relates to real estate exposure. So we attract that capital.
Yeah.
When I talk about wholesale money, I'm talking about sophisticated private investors. That could be family offices, could be wealthy people who want to, through their investment portfolio, want somebody to manage also their exposure to real estate. So we get both of those streams of capital.
And financial institutions are putting their clients into Qualitas as well, aren't they?
That's right.
As a part of their mix. And some are in shares, bonds, so Qualitas gets a tick from some financial services group.
Yeah, independent financial advisors, wealth management groups within the banks, they also bring their clients to us. That's right.
So tell us, when you get this money,
yes,
how do you work out who you're going to give the money to?
Right, okay. So that money comes to us in one of our funds. So we have various strategies all the way through the capital stack. And when I talk about the capital stack, that talks about where we sit in a lending structure, whether we're providing a first mortgage loan, a second mortgage loan, or whether we're doing an equity investment, a joint venture transaction. So that capital comes to us with some sort of direction as to what type of risk those investors want to take on. Yeah. So if it is a low risk position, then we would direct that capital into a fund that's really just doing first mortgage loans. So that could be just funding
lower risk, lower return.
Lower risk. It could be funding the acquisition of a commercial office building or an industrial property, a retail suite. Yeah. It could be funding 10 residential units, but generally gearing that or providing a low loan to value ratio, so lower risk, lower return.
And if you look at that kind of support or funding,
yes,
you see it as a lower risk, and I presume therefore the returns are a little bit lower because it's lower risk.
That's right. That's right. So
what kind of returns are we talking about?
Look, on a fairly simple first mortgage loan, at the moment we're sort of looking at 6 to 8%. So
you're charging the client that?
We're charging the client that, and then we pass most of that through to the investor in the fund. So we obviously take a management fee spread for the cost of our business and how we find the deals and manage those deals, but largely the bulk of that return flows through to the fund returns.
Okay, and then you go up the risk curve?
Yes.
And as you get risk curve, you get more returns?
That's right.
So can an individual retail investor just go and invest in Qualitas? And if so, how do they do that?
They can't. They've got to be wholesale to come into some of our larger funds.
Yeah.
So,
So you got nothing listed that people can buy.
we have a listed fund.
Yeah.
It's a real estate income fund.
Yeah.
So all that does is invest in commercial real estate loans. That was a fund that we IPO'd in late November last year. So it's nearly 12 months old.
Yeah.
Through that IPO, we raised $231 million. Since then, we did a placement and we just did an entitlement offer, and that fund now is up to $365 million. That fund purely invests in commercial loans that Qualitas finds, and that is on the market, and retail investors can buy and sell through a normal ASX.
So there's a unit price that
Yes.
goes up and down, plus you get a dividend along the way.
Well, it's a unit price. It listed at $1.60.
Yeah.
Technically, the unit price should not move because it's a loan. You don't have appreciation of a loan. The only real movement of that would be, I suppose, if you had an impairment of a loan in your portfolio, which caused the net asset value of that portfolio to be lower. But technically, it should trade at its unit price.
Okay.
I think our experience over the last year of that trust is that it hasn't traded below par. It sort of sat, I think, on average about $1.63 to $1.64.
Okay. And what kind of interest has it been paying?
Target return of that trust is 8%.
Yeah.
We haven't traded at 8%. We've traded a little bit below that.
It's a harder environment. When you set the 8, it was kind of easier to think about 8. Our environment has really pushed those sort of things down.
Well, I think two things have impacted it. I think when we listed, the cash rates have moved 50 basis points down from then. However, the bank lending rate has actually dropped below 1%. So it's a greater, more profound impact from that. So it's 1% lower base cost of funding, if you like, and also generally there's competition for those loans in the market, given the chase for yield at the moment.
Okay, so Tim, we've positioned you. Now I think here are the questions that people would love me to ask you.
Yes.
You have to work out who should get your money.
Yeah.
And we've lived through a challenging time for residential real estate. Do you lend money to people in the residential space, people who want to build residential properties?
Yeah, definitely. Yeah, we're a large financier of residential projects,
How-
medium high density in Brisbane, Melbourne, Sydney predominantly.
Okay. So how worried are you in lending to that space, given the fact we've gone, 17 and 18 were house price drops, seems to be a house price recovery now.
Yeah.
What's your professional view on the matter?
Look, you're right. The market moved down. I think we were supplying a lot of apartments in our key cities. I think at the beginning of this year, beginning of calendar year 19, the market was down. It was quite negative. Sentiment was poor. People weren't buying. People were sitting on their hands. They weren't making decisions to buy for their own use, or they weren't making decisions to buy for investment purposes. I think what happened is we had some clear air through the election. So the Labor government was running a negative gearing, change of policy, capital gains, change of policy.
Yeah.
People were really waiting for the election to happen to get some clear policy direction. Labor didn't get into the election. That moved those negative policies, in my view, out of the mainstream. So that gave people some positive thinking and direction as to make an investment decision or a decision to buy. We had interest rate drops, which helped people as well. So I think gradually this year, because of those two key events we've had, the third event would be the APRA moving the serviceability sort of threshold down and giving the banks more flexibility in setting that. I think the APRA set that at 7.25%. Now that I think the banks are setting that themselves around 5%. So that means people can borrow more. So there's three events really that have caused sentiment to improve.
Tax cuts as well probably will
Tax cuts,
come in the mix as well.
So all of that has improved sentiment, and sentiment is a major driver of residential markets.
Yeah.
It really means people need the confidence to buy and make a decision. Now they've got to also make that decision in light of their own circumstances.
Yeah.
How are they feeling about job security? How are they feeling about things generally? So things that outside of their control, are very important. So but it has improved.
That's my next question, Tim.
Yeah.
Okay, so in a sense, you're happy that the health of the residential market is improving because the availability of loans have improved and attitudes improved. But what about the economic outlook? Because we know we've got a slowing economy. Is your analysis that this economy is likely to improve and therefore you're more confident to lend?
Yeah, look, I think there's a couple of things. I think just in terms of the residential property, I'd also say that through our own transactions and anecdotally what we're hearing, a lot of finished stock in residential or inventory that developers are holding is selling. So when you've got a completed apartment building and you've sold a lot of them and you may have some leftover stock that you hang on as inventory, what we're seeing at the moment is that's moving and that's selling. Because
it wasn't in 17 and 18?
Well, no, it slowed down, but now it is actually selling. So that stock that's on the market, so any perceived oversupply in our key markets is now being absorbed. And what's not happening is new stock is coming through. So you've got that supply demand now is starting to tilt back towards needing more supply. We don't think that's going to happen immediately. We think it's a late 20 or 21 sort of event where you'll see more supply coming on. So fundamentally you're seeing that market move because of that. In terms of people's circumstances, as I said, sentiment's a big driver. People have to feel very comfortable that, one, their own circumstances are secure, but secondly, is the market moving in their favour?
Yeah.
People won't buy if they think the market's going to go backwards or if there's a drop. But at the moment, as we said, there's some confidence in the market, and I think people are now saying, maybe it's a good time now to start looking around and buying. So I don't think the pre-sale market is back, and the pre-sale market is people who buy before a development has actually commenced, so they're off the plan buyers.
You need a bit of confidence for that, don't you?
You need massive confidence, and the market has taken a hit. There's been some negative issues in the market around building quality, cracking, those sorts of things. That's another dent in how people see things. Yeah.
But is this something that you've always worried about? Because this is your game. You're lending money to people who build stuff, and you want that stuff to be brilliant, so it sells, the person can pay back all the money, and everyone's happy.
Yeah.
Are you worried a bit about the calibre of apartment building and the cladding issue?
Oh, look, I'm worried to the extent that there are cladding issues. You can't get away from that. There's cladding that was approved for use and was signed off by proper consultants in past times.
Yeah.
Now that's proved, in going forward now, it's proved that probably wasn't appropriate cladding. So that's an issue that has to be dealt with. I think in building quality, the key for us is dealing with, when we lend money to somebody, you're 100% right. Ultimately, that person and that borrower group is responsible to pay that money back to you.
Yeah.
And you've got to make sure you lend your money to the appropriate people on the appropriate project. You look at all factors around a project in terms of the quality of it, where it's situated. Why is that project going to sell? What's the amenity in the area? Is there transport? Why does somebody actually want to live in that apartment building, for instance? So you really got to put yourself in the shoes of somebody who's going to live there and understand what makes that building work. Really importantly is making sure that the builder who is putting that project together and actually physically building it is very capable, and that's what they've been doing for a long time, and their skills are appropriate. They use appropriate subcontractors to bring in the certain trades, whether it's plumbing or formwork or concrete and those sorts of things. So I think what's happening in the market then, it's very negative. However, the positive out of that is that it'll be a better industry coming out of what's happened at the moment. So it's unfortunate what's happened. I don't think it's widespread as it relates to building quality and cracking and those sorts of things. We've had some unfortunate incidents, but I think what will come out of it, and I think last week the New South Wales government announced some new measures in terms of signing off on the quality of buildings. So that's a positive and hopefully will improve sentiment as well.
Was there ever any time over the last year or so where you went to the office and said, these buildings we've lent to, are they all good?
Look, I mean, you do wake up.
Is that a yes?
No, it's not a yes. But I've woken up in the middle of the night a couple of times. But I think in the end, you've just got to go back to your fundamentals and lend to the people who've been doing it for 20 or 30 years and very successful, and their net worth is strong because of their successful track record. And builders who know what they're doing and employ appropriate subcontractors. I think if you are doing cheaper projects with people who haven't got experience, then you're asking for trouble.
Yeah. You've been doing this for quite some time, and you would have probably benefited from the period when foreigners were buying a lot of Australian properties, and APRA then basically cracked down on it. I've heard that foreigners are starting to sneak back into the market. Are you seeing any sign of that?
No, we haven't actually. I mean,
you'd like it, I guess, to shore up the market?
Yeah, I think at a retail level for foreigners to buy apartments and support the market, I think they're always going to be a part of the Australian market. We're attached to Asia and part of Asia, so I think you'll always have foreign buyers coming in to buy stock in Australia. At a wholesale level, where you had foreign money coming in buying sites, development sites, and developing, particularly Chinese, that's gone. We haven't seen any of that, and that's still working through the market. There's still people who pay too much for sites in the back end of the last cycle, so 17, 18, and those sites are working through the market. But at a retail level and people who buy apartments, I think certainly foreigners went away, and some of that was because of just the market conditions, but also the government did put impositions on foreign buyers in terms of increased stamp duty, etc. So that's a hindrance to the market, and I don't necessarily think that's appropriate. I get why the government's done it in terms of not inflating prices unnecessarily and for foreigners to outbid, if you like, local buyers. But in the end, foreign buyers, we're free market. Foreign buyers will buy into our market, and that will be part of our fabric. Yeah.
All right, last one, mate. A lot of alarmists like to believe that there's going to be an avalanche of apartments, and this is going to create another leg down for house prices. I would have figured in your game you'd have a pretty good handle on whether an oversupply of apartments is going to be a problem for your business.
Yeah, we look pretty heavily at and closely at any apartment development you look at and why that's going to work in a certain area. I think what's happened at the moment, I think there's going to be a fundamental change to the market. I mean, we've had maybe 25 years of apartment development where we have this pre-sale regime in place where before a developer can actually start building and activate their finance, they need 80 to 100% of their loan covered in purchase contracts from buyers. That's been in place for that couple of decades.
And banks
plus.
have basically insisted, haven't they?
Banks have insisted, or non-banks have insisted upon it. But that's changed now. I don't think we're going to see that level of pre-sale at that level for some time. I don't think we'll get there. So. What's important to make sure supply is delivered to the market is that banks, non-banks, alternate lenders look at helping fund some of these projects at a lower level of pre-sales, because you're not going to get those 100% cover positions at the moment. So I think it's more about actually making sure supply comes on than being worried about too much supply. In the end, developers aren't going to speculate on a tower. They won't get finance on that basis. You'll need a level of sales to justify and to demonstrate the demand for that project, the liquidity in the market, etc. So I think it's more about helping supply than worried about oversupply.
And do you think, as a consequence, there'll be less high-rise and more lower-rise? Because it might be easier to sell a lower-rise apartment, and banks might be more prepared to lend to one of those sort of...
Oh no! Look, I'm of the view that we'll continue to see high-rise. It's a good use of land. People are getting used to vertical living. Sydney is a good example. We don't have a lot of spare land. It's expensive, so it makes sense for me that we build up and we build close to transport, close to amenity, and those sorts of things. We don't have the benefit or luxury of having great land holdings where you can put low rise. And in the end, we need people to live close to their work environment as well.
Okay, thanks, Tim.
No worries. Thanks, Peter.
That's Tim Johansson from Qualitas.
Basically, the economic analysis is very interesting, macroeconomic analysis, and of course Peter's very entertaining.
Well, I come every year or twice a year, and I love it because I get so much information, and I run my own super fund, so for me it's really, really good.
It's been very, very informative, and I must admit, some of these share fund managers, they're quite funny, and I think they've made it such a pleasure to be here. So I've loved it. Looking forward to doing something with my money and becoming rich.
Got a lot of people who are very talented people in the industry. We are getting an expert at one place, so that's one of the best thing I've found here. And I would like to thank Peter Switzer for organizing this for us.
Just having the exposure into the market and looking at constructing a portfolio, I think it'll be just a great experience. Just meeting a lot of people as well.
Oh, I really enjoyed it because I came really looking for some income stream because it's just not worthwhile for me to keep my money in the bank anymore, and it's given me some really good ideas, the options that are available there. So yeah, it's been really positive.
It looked really interesting about going into investing and more like building your wealth for the future. and not just relying on, say, like an income and stuff like that.
I've always believed in a great line that my wife taught me, Maureen, but she quoted William Blake once, and she said, Blake once said, "Without controversy, there's no progress." And that's, in many ways, the relationship I've got with Paul and the relationship I've got with Maureen as well. In relation to Maureen, I always say, she actually decided to become my life coach, even though I didn't even know I needed one. But without her looking at me the way a Labrador watches a sausage at a barbecue, finding out what I'm doing wrong and actually telling me how I can fix myself up, I wouldn't be here today. So that's why I always say behind every successful man's a very surprised woman.